Hello and welcome to another update video about Google Alphabet. Today we cover this stock. I think we haven't covered it before on this channel. It's one of the stocks that was requested by one of our Discord members. If you're interested to check out our Discord server, you can access it via our Patreon page. You'll find the link in the description. You can find our different tiers that we offer with the different, tiers, the different extras we offer, additional updates, stocks updates regularly, daily video updates about the S&P 500, additional personalized updates for you in the professional membership. You get 2 requests per week, for example. So maybe there's something for you. Check it out if you're interested. If not, that's fine as well. Just stay tuned for the analysis here. Looking at the long-term chart, this is obviously, as I said, the Google Alphabet stock. We are here looking at the 4-day chart, entire history basically, and you can see that an initial 1-2 setup formed and bottomed in 2008 actually, here at around $6.20. Then we had a long third wave to the upside. So we have a couple of 1-2 setups here around 2012. Then this unfolded nicely as an upside impulse. This was the 2020 low here, March 2020, which was a wave 4 low. And since then, apparently, as per my interpretation, a 5th wave to the upside started to unfold. We have a 1, 2, 3, 4, 5 structure. We are likely now in the 5th wave. And this is now getting interesting because that indicates that we're very close to the end of a long-term impulse. If I go to the daily chart now, we see a little bit more detail. And here you can see we have a 1-2 setup, wave 3, 4, and this is now the 5th wave of the 5th wave of the 5th wave of the larger 3rd wave. So while I cannot tell you yet that we have topped, I think it is time to be very much on the side of caution there. And at the moment, the trend is still up. But it looks to me as if this last bit is an ending diagonal, given how this is structured as an expanding diagonal, expanding wedge basically. And even here we are in the 5th wave, as it seems. Now, again, I won't confirm a top until we really break support, but this is already telling me that this is time to be on the side of caution. We even have formed a higher high compared to the November 21 high, and it's a pretty full wave count. So now let's go to the 4-hour chart. Here you can see this actually in detail. A wave 1, so the wave 4 low bottomed here in October 23 at around $120. We're now at 156. And then you can see wave 1, wave 2, wave 3, a deep wave 4. Valid, but deep. And now this could be the 5th wave, which actually made already a higher high, reached a 78.6 extension, and this seems to be resistance. Now, at the moment, I cannot rule out that we push higher. Maybe the next upside level would be $167 to track, to reach as the next resistance level, and then 177. But yeah, I think it just looks like it's very much at the end here. But as I said, I will not confirm a top in place until we break support. And what is key support level? Well, key support level is this red line here. I'm going to put onto the chart now. This is obviously the last significant swing low. A break below that level would indicate that really this major, large degree 3rd wave is topped and a major top is in place. This level is at $131, but we can already check the Fibonacci support levels as well, because a break below the 78.6 retracement will be a first warning that something is starting to break, and that's at $136.60. So if we get further upside extensions, normally you wouldn't expect the price to break below $136. In this case, the 78.6 retracement. So that would be really a first warning that something doesn't that the bears are basically starting to take control here. It's just that, when we're getting close to an end of a rally, you typically see these overlaps in the structures. And that's what, from an Elliott wave point of view, we call diagonal patterns, that's when the trend is still up, and but the bears are already getting stronger. And that's a really, really good warning that things are going to change. Because you see here how the structure has changed from here, where we didn't really have overlapping price action, just made higher highs, until here. And then we get all of this overlapping price action. And of course, we could get maybe another extension, but it's more about understanding, okay, what's reward and risk? And here the risk is now to the downside. Because if we break below that low, then it opens the door for a very, very dramatic wave forward decrease, which probably would first of all cause a test or lead to a test of these December 22 lows around the $80 range basically. It's quite a substantial move down, maybe even lower, maybe even lower. It would be an ABC structure to the downside, wouldn't fall in a straight line. There would be ups and downs, of course, but also an ending diagonal, when it breaks, it typically is followed by a very sharp reversal and very swift, very rapid. And so not to be caught off guard, I think it's valuable to follow these updates and just to know where we are in the overall cycle. So I gave you the next upside targets. I gave you my assessment of risk. I gave you the next support levels and also the critical break point. So, I mean, a break below the red line here really is a major top signal. And then obviously if that would need to be further confirmed with a break below the $120 mark as well then. That's my update about Google Alphabet. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. You'll find a link in the description. Thanks a lot for watching. Bye-bye.